Welcome back, traders. In this episode, I'm going to break down the charts for gold, Bitcoin, and the US 100 or the Nasdaq 100 index as markets are bracing for potential fireworks at the start of the summer season. Well, a US federal court in Manhattan has just blocked President Trump's sweeping tariffs against global trade partners in a major blow to a key component of his economic agenda. Well, of course, most of the tariffs are currently suspended. The White House has now just 10 days to complete the bureaucratic process and shut them down. But with legal uncertainty hanging in the air, a big question is, could higher level courts still revive Trump's tariff plan? So all this creates a nice backdrop for price volatility, and it would be quite interesting to see how markets will react in the coming sessions. So let's see what the early technical signals suggest. And starting first with gold, we can see that the precious metal has been on the back foot over the past couple of sessions after finding resistance at the upper band of this bearish channel. So that creates some concerns that perhaps this might be the start of a new bearish wave. If we look at the technical signals, they have weakened. We can see that the RSI is now closer to its 50 neutral mark. The stochastic oscillator is trending lower, and the MACD is slightly below its red signal line. So the technical signals suggest an overall neutral to bearish bias. As we can see, the price is currently trading near its 20-day moving average. It's finding resistance around this line at 3,290. So if we hold below this line, we could see a continuation lower, and in this case, support could initially come from the 50-day moving average at 3,225, and then a more important support territory could be this ascending trend line over here coming from December 2024. This is where the price found pivoted back in a couple of weeks ago. So that area around 3,163 and 3,180 could be important to watch. If we fail to hold here, we could see a deeper decline towards the 3,170 and 3,108 zone, where the lower band of this bearish channel is placed. So failure to hold here could probably create more selling, could generate fresh selling interest, likely pushing the price down to 3,295 and 3,000 territory. Now, in case of a bullish reversal above the 20-day moving average, the price should also overcome the upper band of this bearish channel, currently seen near 3,345. If we successfully close above this constraining territory, we could see that could generate fresh buying pressures, driving the price straight to the 3,440 key resistance territory, and perhaps the price could even try to reach the all-time high of 3,499 or even touch the 3,500 psychological mark. Now, looking at the US 100 index or the Nasdaq 100 index, we can see that like gold, stock futures are trading higher after the encouraging tariff news. That's a pause of tariffs could benefit businesses. So that's creating positive pressures in this market, in stock markets. The big question, however, is whether the US 100 index will manage to close above the 22,000 level and the 22,236 all-time high that it registered back in February. As we can see from the technical indicators, both the RSI and the stochastic oscillator are very close to their overbought level, suggesting limited room for improvement. So it remains to be seen whether the price could print a new higher highs above this territory. If it successfully manages to overcome the zone, then the next resistance could emerge near the 22,800 and 23,000 zone, where the upper band of this bullish channel, which has been providing strong support over the past couple of sessions, as well as this constraining line from 2024, could block upside pressures ahead of the 23,500 territory. This area could be important to watch because this is where this line that connects the highs from July 2024 and December 2024 is placed. Now, in the negative case, if the price were to close below this tight bullish channel, well, the price could decline towards the 20-day exponential moving average at 20,900, and while slightly below that, there is a key constraining zone, a congestion zone between 20,380 and 20,620, where the 100 and 200-day EMAs are placed. Lower than that, the focus could turn to the 50-day EMA and this longer-term constraining line over here drawn from April 2024, currently both seen between 90,540 and 90,740. And finally, looking at Bitcoin, while the king of cryptos has been in consolidation over the past couple of sessions, it seems that it's creating a descending triangle over here, which is usually a negative signal. However, we can see that the price is also within this bullish channel, supported around the 106,700 level and slightly above the 20-day moving average. So that keeps some optimism intact. If the price were to close above the key constraining zone between 109,920 and 111,250, we could see a fast rally towards the 150,000, 160,000, and 165 zone, and towards the upper band of this bullish formation. While higher than that, the 120,000 psychological mark could be the next target. Now in the event, well, if we look at the technical signals, however, we can see that the RSI, the stochastic indicators have already peaked in the overbought zone. They are trending lower, while the MACD is deviating below its yellow signal line. So that creates some skepticism about whether the price can print new higher highs, can post a bullish breakout. So downside risks remain, and the break below the 106,700 level could drive us down to the 23.6% Fibonacci retracement level of this supply at 103,203. And while a deeper decline could reach the 38.2% Fibonacci mark of 97,700. Where the 50-day moving average is currently placed. So that's everything I wanted to share with you guys. Hope you liked my analysis. Of course, we'll be back with more analysis next week, so stay tuned and watch out for the tariff headlines. Thank you for watching and see you next time. Bye bye for now.